Another reason why some good coaches and traders quit so early is as a result of lack of risk management. I always clamor on risk management. In fact, most of my videos, I talk about risk management, especially when it comes to crypto. I talk about management. Lack of management is a hidden killer when it comes to trading, because if your entry is just focusing on the signals, indicators, winning rates, but you ignore drawdown control, position sizing, capital preservation, or losing streak survival, you may turn into a stop loss friend. That is, even if you apply stop loss, or the market will just liquidate you. That is just the fact. If you don't apply risk management in your trade, you are just like those people who are saying that crypto is scam or trading is scam, because of course the market will take away all the money you've got. The market will blow your account. So risk management should be prioritized in your trading strategy. Okay, so when you don't apply risk management, if the trade enter a losing phase, what happens? Your losses will continue to compound. If you are losing $10, you see yourself losing 20 to 100 or even $1,000. Your psychology will automatically break, because you are seeing yourself on losing streaks and your account will get damaged. At that point, what happens? You will stop to trade, because your account is already damaged. You don't even have the money to trade again, or you begin to switch strategies repeatedly. You begin to look for, okay, at that point that you are losing money, the only thing you are thinking is how to get out of that point. So you begin to change different strategies, begin to apply different strategies, and if the strategies you apply didn't work, you disappear from the market. All right, so that is it. Another thing that can make you to quit crypto as a beginner or trader is when you don't have adaptation framework. All right, markets are dynamic systems. Most short-lived trainers teach fixed rules, teach one setup, and teach exact entries. They don't teach thinking. So when conditions change, they don't know how to adjust, they don't know when not to trade, and they don't know how to switch playbooks. But professional traders survive because they scale risk up and down. They change execution style and sometimes stay flat for weeks without trading. So many trainers can't stay flat. They need content, they need signal, they need to be hyped. So they need to keep on dropping signals. That is why they always run out of the market. All right. Because at a point, the market will no longer favor that particular strategy. That is why I tell people that the only thing nobody will teach you is your own personal strategy. You can use different people's strategy to build up your own personal trading strategy, but nobody will teach you this is the strategy you must be using. Because if anybody teaches you that particular strategy, at a point that person who taught you may not be using that same strategy, and the strategy will no longer favor you. So your strategy is a combination of the experience you've got with other people's strategy that you have applied in the past. Then you come up with a strategy that survive different market conditions. That is how to remain in the trading market. All right, another thing that can make people to easily quit is psychology breakdown when the age fades. This part is mostly not discussed by people. Okay, so when profit stops, what happens? Ego hits. Imposter syndrome kicks in. Public pressure from students increases, because if you are the student will want you to continue with that pace you used to have. Okay, now instead of the person, a trainer, to admit that the market has changed and we need to adapt, they force trades, they hide losses, and then they only pick the ones that goes well, the result that goes well to share, and they stop posting transparently as they used to do. Eventually motivation dies, community trust drops, and the trainer will automatically vanish from the market. All right, I know that some of you have experienced some trainers like that, that are no longer the way they used to be, and if you chat them, they don't even reply to your messages again. Okay, another reason is because at a point some trainers switch into teaching without trading. They switch into teaching without trading. So how can you be teaching people how to trade and you will not be trading, and you are telling the person to go and trade while you are not trading? Some trainers transition fully into teaching, stop trading actively, rely on old screenshots or simulations without live market exposure. They lose touch with reality, because when you are not trading, you will not even understand what is happening with the market at that point. Strategy decay unnoticed, feedback loop breaks. So by that time students will feel the pain, because the students are the one that are trading while the trainer is not trading. The trainer is already detached. When the students are feeling the pain of continuous losses, they will detach themselves from the trainer. All right, so these are the factors that hinders trainers and new traders from remaining in the market. In the next video, we are going to discuss why few trainers actually survive long term and don't easily quit the market.